Hello and welcome. In this video we'll be looking back how my stocks and shares ISA with Hargreaves Lansdown performed over the month of February. We'll also be seeing how much my £50,000 worth of premium bonds earned me in March's draw. This video has taken a good week or so longer to make than planned, as we've ended up with a surprise addition to the family. Unfortunately, this little boy's owner died suddenly and he had nowhere else to go, so we took him into foster, but I think he's adopted us now. I mean, look at that face, you can't say no. Last couple of weeks have been pretty much taken up by him, trying to get him settled and make sure he's okay. So welcome to the family, Cobain. Before we start taking a look at my portfolio, let's see what affected its performance in February. Both the UK and the US raised their interest rates again. I'm invested quite heavily in both of these markets, so this did have some impact. The fact the rates have been hiked again shows that we haven't seen the last of high inflation just yet, and this knocked investor confidence. The higher rate is great for savers, but not great for those with debt, and if the cost of your debt is increasing, then that means you have less disposable cash to spend, which leads to a shrinking economy. On the plus side though, the UK economy fared better than expected, as data for the last quarter of 2022 showed that the UK had managed to stay out of a recession by avoiding 2 negative consecutive quarters. There are still fears that 2023 could see a technical recession, but analysts are predicting that this won't be as bad as previously feared. Of course, time will tell on that one. We've seen over the last few years just how much daily life can change in the course of a year. This news will likely influence my investment strategies moving forward, but I'm still being cautious. With no quick end to the financial turmoil we've seen for so long now, I won't be jumping back into the markets with both feet yet, and instead will be cautiously dipping my toe in as and when I see something I fancy. So with that out of the way, let's start taking a look at my portfolio. I'll start with income. Firstly, my loyalty bonus. I got 49p this month. This has been low for the last few months, to the point where it would take years to reach the £10 needed to reinvest it. But after buying up more units of the emerging markets fund I hold, I've boosted this income too, meaning at this rate I should be reaching that £10 a lot quicker than I would have previously. In January I only received 40p, so realistically I've boosted this by nearly 1/5. It's a small step, but I'm not feeding in huge amounts into funds at the moment, so there won't be any significant leaps here for a while. Where I did get a significant leap though was a dividend from my Eden Tree fund. I received a much more respectable dividend of £7.82. I've been aiming for £10 a month over the year in dividends. This is the first dividend I've received this year, so on average it only works out £3.91 a month so far, but some of my bigger holdings will rectify this later in the year. This time last year I received just over £5 in dividends from the same fund, and I've only bought an extra £100 worth since that dividend. Moving forward with this fund though, I have a dilemma. Hargreaves Lansdown released a note regarding this fund at the start of March. The gist of it is basically that the fund has had multiple managers recently, and where they had faith in the previous fund managers, they aren't so impressed with the latest. I don't have a huge stake in this holding, I have just under £300 worth. I may wait it out and see how it fares. It does have a fairly high percentage of bonds making up the fund, which inflation will be slapping chunks out of. It also has a high stake in Legal & General, which is also something I own a fairly large amount of in individual shares. As these are fairly down at the minute, this will also be affecting the fund. Legal & General did however just release their latest financial results, and they're on the whole looking impressive with a 12% increase in operating profit. They also proposed raising their full year dividend to just over 19p, a jump of 5%. As I hold a reasonable amount of LGen, and their dividend was one of the reasons for investing for me, this is great news, and is one of the reasons why I'm hopeful I can smash my aim to beat £10 a month in dividends. So moving on to my portfolio on the whole then, it is looking way better than it has in recent months. Yes, there are still a few problem areas, notably the emerging markets fund we looked at earlier, and LGen, which I've also addressed. These should bounce back a little soon. In fact, since taking these, LGen have already seen an uplift of 6p. The real star this month though has been Rolls-Royce, with my returns nearly hitting 50%. That is really good to see and something I've been eagerly expecting for some time. I've cost averaged my way in for a short amount of time now, slightly regretting I didn't buy in sooner, but I am generally a cautious investor. The question is though, do I set up and look for the next bargain, or hold on and see how we go? I made a video recently where I saw some potential problems for the company moving forward, but I'm not saying it's all negative. The they're still a great company with a lot going for it. I think I'll likely hold on for a bit. Hopefully a dividend will be introduced again soon. It is currently suspended as a condition of their loans. But if it does return, then that will likely help sway my decision. I did come pretty close to selling off the Fidelity allocated world this month. I've been thinking of doing that for a while now, and it's finally out the red, so it seemed like a fitting time. I've held off for now though, as I wasn't sure if I could secure cash for another investment I'm currently making. It's very hit and miss, and is either going to cost me a lot of cash, meaning I may have to sell off things like this fund to shore it up, or I may be able to secure some funding and not have to stretch so much. Luckily it's looking like the latter. I really hope I can update you guys with news soon. It's been in the pipeline now for so long, just getting it over the line has been the hardest part. I'll run through my remaining funds now, before we take a look at my premium bond winnings for March. This will likely be the last month of holding the full allocation of £50,000 unfortunately, as this is something I'm likely having to cash in to fund other projects. Let's take a look though and see if cashing it in will be a big loss. So in March I won nothing. Magic. What a parting gift. Thank you so much. That's it for today. Please leave a like and subscribe for future content, and I hope to see you next time. Stay safe out there. Peace.